Good morning and welcome. This is BloombergQuint's research team's introduction and also an update on what's going on with your stocks today. So with respect to stocks, we are looking at the Nifty now moving towards 9,500. Reasons, and one very big reason is the FMCG sector, which is leading the gains, and that is because of the GST rates which are out, and that's been taken as a very big positive. So I'm going to start off with what these FMCG stocks are doing right now, and also the reason why they have gained. Starting off with Colgate-Palmolive, which is up as much as nearly 6% right now, and this is of course on account of the 28% rate on toothpaste. Now, what is the advantage that we are looking at when it comes to Colgate-Palmolive? For now, when you consider the excise as well as VAT, Colgate pays duties worth 28%. But as against its competitors, Dabur as well as Patanjali right now, if you consider Dabur and Patanjali work out of excise free zones, so they only pay VAT. The advantage that Colgate now has is that while Colgate can easily pass on these rates to its customers, it will be harder for Dabur and Patanjali to do so, and that's the competitive advantage that Colgate has, and that's going to impact Dabur and Patanjali's bottom line, but not as much as for Colgate. Next in line you have ITC, which is also gaining nearly 4.9% for now. The reason is more clarity in the cigarettes. Considering the fact that you have your VAT rates out and now the cess standing at around 5% plus your cigarette sticks, that is nearly 2,000 rupees per 1,000 sticks. That's the reason why you're looking at ITC also gaining substantially. Marico, of course, you're looking at an 18% GST rate. So that's the reason why, and this is of course an advantage given the fact that earlier you used to pay around 25-26%. And that's the reason why you're looking at substantial gains in Colgate-Palmolive, ITC as well as Marico in today's day of trade. But another stock which took quite a beating yesterday was CESC. Went down substantially, but we are looking at a little bit of recovery, and I'm going to go to Nikki and ask as to why we are looking at these gains in CESC today.
So soft earnings and the confusion in the amalgamation details yesterday led to the fall in CSE, as much as 15% fall that we saw for the stock coming today. However, the stock has bounced back today and it's 6% gains that we're seeing for the day. Now this is post some clarity coming over the amalgamation details, which is the investors who now wish to get an access over the power generation and the distribution, for that matter, assets, can directly do so after the regulatory clearance and the shareholders approval. So Chandrapur assets will start yielding in their cash flows in the next few quarters. Also, we have Haldia assets doing exceptionally well. So that's really gone down well for the shareholders and for the company, for which we're seeing the stock reacting and is up by 6% today. Also, we're seeing some reaction coming in from banking stocks. Bank of Baroda, to be precise, has been reacting quite a bit after positive set of earnings. Shraddha could take us through that.
Absolutely, Nikki. Bank of Baroda rallied as much as 3.5% on the back of earnings, which came out later in the evening yesterday. Just to share the net profit number, it came in at 157 crores, so it's actually swung back into the black after reporting a net loss of 3,200 crores last year. But when it comes to PSU banks, the focus is never on profitability, it's undoubtedly on asset quality, and that's where that cheer is coming from. So gross NPA number came in at 10.46% versus 11.4%, so a sequential improvement coming in there, but that was largely aided by higher recoveries that Bank of Baroda has managed to do. So slippages during the quarter came at 4,077 crores versus 4,134 crores in the December ended quarter, but recovered loans worth 2,300 crores. So that's what's working for Bank of Baroda. Let's talk about the positives and the negatives. So when you talk about the good part was that the divergence with the RBI estimation when it comes to the gross NPAs for FY16, like we had seen in the case of Yes Bank, which had reported that significant divergence in its annual report. In case of Bank of Baroda, the divergence, the gross NPA number came only at 295 crores. That is a very small number compared to its total loan book size. Additionally, the Managing Director and CEO P.S. Jayakumar said that he is expecting gross NPS in the range of 45 to 46,000 at the end of FY18. Now they stood at 42,000 crores at the end of FY17. So we are expecting that number to go up slightly. But again, he has said that estimate was conservative. He'd also guided for 45 to 50,000 sort of a number for FY17, and it came below that at 42,000 crores. So some churn coming in there. The bad news is on the capital front. The capital is running low for the bank. The CET1 ratio of the bank stands at 9%. So undoubtedly the bank will have to go and find ways to generate capital, whether it is in terms of its changing its portfolio mix, fundraising, or stake sale in non-core assets. And not to forget, for FY18 you will also have a negative impact on capital coming in for banks, not just for Bank of Baroda, but for banks, given the transition to new accounting standards which may require higher capital. But for this quarter, good set of numbers. NPAs have improved.
Shraddha, before we go to Somit, I just want to come in on maybe an expectations on the SBI and what Bank of Baroda numbers mean for the entire public sector bank, especially given the fact that they really haven't done too well as against private sector banks.
Absolutely, Agam, but most of those negatives are there in the valuations.
In the
There's
pricing.
this big valuation divide between the PSU and private sector banks. SBI again, of course, is more going to be looked at from the perspective of management commentary coming in with respect to guidance on how the cost benefit and integration with its associate banks, which becomes effective on 1st April comes. So of course asset quality is one thing that we are going to keep an eye out for. Updates with respect to the SBI Life Insurance IPO, and undoubtedly on the merger with the associate banks. But overall, if you see the numbers so far, even for PSU banks, they have been pretty mixed. It has been, it depends bank to bank.
Right.
But clearly the common trend that we have seen this quarter is that the street has rewarded banks which have reported a marginal improvement in asset quality,
right,
and stocks which have seen a further deterioration have actually got hammered. But more interestingly, we have HUDCO which lists right now, and we're going to talk more about that.
Yes, Housing Development and Housing and Urban Development Corporation Limited is all set to list today at 10 am. The pre-open price is at around 73, and analysts are also expecting it to list at a higher premium. Now it was subscribed around 79.5 times, as it was raising to more than 1200 crore rupees from its IPO. In the subscription share, if you see, high net worth individuals had subscribed the IPO more than 330 times, and qualified institution buyers, that is the QIBs, had subscribed it 55 times, and retail investors had subscribed the IPO 10.6 times. Now, HUDCO is a 46-year-old government-owned company which provides loan for housing and urban infrastructure projects, and it has no direct listed players. At its issue price of 60, the company was valued at close to 12,000 crore. And we are expecting a high premium listing of this IPO at around 10 am. It's going to list today.
That's right. So keep an eye on HUDCO. Of course, we're expecting a premium on the issue price. But I'm going to go back to the capital goods sector. We've had these ups and downs for SESC, and we've also had numbers coming in from Cummins as well. Can you tell us a little more about what you can expect from this sector as a whole in general?
Sure. So Cummins numbers were clearly disappointing, and for the GST pertaining to the sector, capital goods sector says, I spoke to a few analysts and they feel that it's going to be a neutral for the sector, given that most of these companies are going to pass on the duty to their customers for that matter. And for the companies which have been, obviously there is an intersale transfer, tax transfer, these companies will take a hit because the tax earlier was in the range of around 14.5% from this company, and that will shoot up to 18%. So obviously we see that cost escalating for these companies. Nevertheless, for the companies which are just manufacturing these goods and selling them in the very state, they stand to benefit a bit from this move. Net, it's going to be a neutral move for the sector for that matter.
There you have it, guys. We are looking at the FMCG sector as a whole in the green. Bank of Baroda also doing very well, and CESC has also taken a turn towards the positive, and of course we're expecting HUDCO to open with a premium. So that is your roundup of all the stocks and in which are in action today's day of trade. Stay tuned in a BloombergQuint and we will bring you more.